Hey folks, welcome to Zoom Out with TouTzuSays, and this is my 2025 Crystal Ball Outlook. Now, before we get started, remember that I'm biased, I have blind spots, and this is for your entertainment only. This is not investment advice. First, let's start with my forecast for the first 2 years of Trump 2.0. With the Republican sweep of Congress last November, Trump has a powerful opportunity to push through changes. This time, Trump is better prepared, and I would expect that he will approach the next 2 years like a turnaround CEO. He will rip the Band-Aid off, reverse Biden, rapidly put loyalists in every corner of government, and implement changes in policy and operations across all government agencies at the same time. For corporate America as well as small businesses, the hope of deregulation and lower taxes will probably spur some animal spirits in the first half of 2025. Meanwhile, the looming threat of widespread tariffs will remain, and many businesses will preemptively restock inventories, which will necessarily boost GDP in the first half of 2025. But as new policies are announced and implemented, I don't think that Trump has a master plan that is coordinated across agencies to minimize negative consequences. Like a turnaround CEO, he'll cut first, fire first, and then work to repair the biggest issues. However, the US is not a company, and disruption or confusion from the agencies have real-world consequences on US citizens and businesses. During Trump 1.0, I remember distinctly how his tax reform package caused major confusion for the IRS, and consequently for all CPAs. They functioned blindly, not able to get feedback or opinions from the IRS in a timely manner, and I'm sure there was a lot of rework and extra work done just to remain tax compliant. Similarly, I can imagine agencies from the IRS to Social Security, education, and transportation simultaneously being thrown into chaos and unable to function effectively for the United States. In the second half of 2025, I would expect these issues to start to bubble to the surface, creating frustration, resistance to change, and infighting. Meanwhile, central banks will be done with the majority of their monetary stimulus measures, and the US will try to shift to debt reduction and cost cutting, which are negative for liquidity. In 2026, the full effect of tariffs will hit consumers with price inflation, wage inflation, and still high interest rates. So I expect an economically weak to negative 2026, coinciding with a strong showing by Democrats in the midterm elections. Here are my baseline forecasts for the US. Trump 2.0 starts off strong, but the pain of his Band-Aid ripping will eventually slow government and business function. With deportation and immigration reform, the US labor pool will likely shrink rapidly, spurring wage inflation. Meanwhile, as tariffs are enacted, the price of imported goods will also rise, causing price inflation. For this reason, it seems like the US inflation is unlikely to fall much and may even rise. As a result, the Fed is unlikely to cut much more and have explicitly expressed concerns about Trump policies keeping inflation higher than their target. In this scenario, the US dollar is likely to remain strong as other countries cut rates to stimulate their economies. Broadly speaking, the US economy surprised to the upside in 2024, and with weakness in major economies across the globe, like in Europe, China, Canada, the US is likely to again outperform in 2025. Finally, with rising liquidity and the strong dollar in the first half of 2025, US assets, stocks, are likely to remain attractive and outperform. Aside from China, where else in the world can you invest in the leading tech and AI companies? Now, a major theme for Trump and his Treasury Secretary-elect Bessent is to reduce the US budget deficit. So I want to dig a little deeper here so we can crystal ball some potential risks and opportunities. The total US government budget is about $6.75 trillion. On the left side of the chart, we have all the income that the US government collects. You can see items like income tax, corporate tax, customs duties, etc., that total about 4.92 trillion. On the right-hand side, we see all the expenses that keep our country running. We have entitlement spending, defense spending, interest we have to pay on issued US treasuries, etc. This adds up to about 6.75 trillion. Clearly, what we earn is less than what we spend. We have a deficit of 1.83 trillion. Where do we get that money from? Well, we sell more US Treasury bonds, essentially borrowing money from investors around the world. I'm no expert in government budgets and spending, but here's my highly speculative forecast for government income and expenses over the next 2 years based on what I predict for Trump's policy changes. Overall, tariffs will likely be implemented faster by executive order, while making Trump's tax reforms permanent will require Congress and take longer to implement, so probably fall 2025. I don't see big changes in income for the US, but since I expect the economy to grow, we should see some increase in income. Tariffs will generate more income, but if you go back and look at how much custom duties are collected compared to other major taxes, it's hard to see how much of a positive impact it will have on the overall budget. On the other side of the balance sheet, all expenses should continue to rise in 2025. DOGE will initiate cost-cutting measures, but I doubt there'll be much impact to spending in 2025. So net, I doubt there'll be much impact to the US deficit level, thus requiring continued high issuance of US Treasuries in 2025. For 2026, I'm forecasting spending to remain about the same, but with a slowing economy, I expect a flat to lower total income level, and with smaller overall deficits, thus requiring less treasury issuances. Counterintuitively, less issuance tends to lead to less liquidity. Over the years, and a major election topic is the US dollar's reserve currency status. So let's take a look at who actually owns US Treasuries. First thing to note is that over 75% of treasuries are actually owned domestically within the US. This provides a deep moat of protection against an uncontrolled sell-off of treasuries in US dollars. When you look at countries that have gone bankrupt, inevitably their debt is owned by foreign investors. So when a crisis happens, they panic sell and force a country to collapse. In the US, we are not in danger of that. With 23% of treasuries owned by foreign entities, it would take a massive coordinated sell-off to move the needle on US Treasuries' AAA status. It is the highest quality collateral and the foundation for global transactions and credit creation. As a result, the US dollar also enjoys an established role in the global financial system. So even if China and her allies all tried to dump the dollar in US Treasuries, the overwhelming majority of treasury owners would not participate. Furthermore, a country could dump their dollars in treasuries, but what currency and sovereign debt would they move it to? What alternative countries or currencies enjoy the quality, the faith, the scale, and the exchangeability of the US dollar and treasuries? The reality is there isn't even a close second to the US. The US economy is surprised to the upside in 2024. For Q4 alone, they're forecasting over 3% and will close out 2024 with an overall GDP growth rate well over 2.5%. So with my forecast of a strong H1 first half of 2025, we're nowhere near a recession anytime soon. Trump talk about deportations and immigration reform are very likely to get implemented, as a lot of it is within the executive branch's power. But what does this mean to the real economy? I remember seeing a figure of about 6 million illegal immigrants living and working in the United States, and they have boosted the available labor supply, thus keeping wages down and, surprisingly, also keeping unemployment low. Much of the labor force in critical service industries and farming are dependent on this pool of workers. The rise of foreign-born labor actually helped keep the US economy humming over the last 4 years. So, by reversing this pool of labor, we're likely to see strong wage growth and general inflation, but that inevitably leads to demand destruction and a slower economy. Even the Small Business Survey is expecting 4 to 5% wage growth and dragging inflation up with it. Geopolitically, Trump 2.0 is about US isolationism and mercantilism. US isolationism typically causes weaker states to falter or collapse, like Syria, and the power vacuum invites neighboring states to quickly and sometimes forcefully pursue their own interests. This is destabilizing and creates geopolitical uncertainty. U.S. mercantilism, which is basically leveraging trade for nationalistic goals, will likely trigger reciprocal mercantilism. The U.S. is uniquely capable of surviving this type of conflict, but World War I is the blueprint of how this can devolve into a broad, even global conflict that the U.S. eventually gets sucked into anyways. U.S. isolationism and mercantilism has never worked, so let's see if it will be different this time. Now, against this backdrop, most of the rest of the world's economy is weak, and we're likely to see more monetary and fiscal stimulus coming out of the major economies. As the economic pie shrinks, unhappy citizens and democracies will vote for drastic change in government leadership. I also see the Ukraine war ending this coming year in a ceasefire agreement, something similar to the North and South Korea type of agreement. I think after the Ukraine war ends, Russian-China relations will start to weaken as China tries to reinvigorate its own economy and try to get unhindered by Russian sanctions. I think India and Turkey's power grows while Iran weakens. I'm seeing rising militarization in Asia and Europe, and I still think that China is going to struggle to revitalize their economy, setting the stage for escalation of conflict with the Philippines and Taiwan into 2027. As a reminder, I think the EU remains structurally weak for decades. Political disruption and indecision, age demographics, they have the most expensive energy in the world. It's really not a recipe for vital economic growth. But outside of China, I think Asia has a younger demographic and higher economic activity. I think they're going to continue on a growth trajectory. To visualize this a bit, here's a global map I made of government transition countries, countries with weakening economies, and a few countries with growing economies. Now, this is not an exhaustive map, but it's easy to see that, with the exception of the US, the major economies are in for a tough 2025. This chart reiterates the fact that most major economies have already started monetary stimulus. Interest rate cuts will likely continue, and we'll probably see some actions from the quantitative easing playbook as well. Here's a list of top elections to watch in 2025 that I gleaned from Ian Bremmer at G0. I'd like to highlight a couple of countries. Germany is a cornerstone economy of the EU, so which way it swings in the next election will alter the path of EU unity or disunity for the coming years. France, which is not on this list but is the other cornerstone of the EU, is suffering from a gridlocked government that's unable to function. If they don't resolve this soon, they will weaken themselves and the EU as a whole. Although Canada does not have a formal election until October, it's highly likely that Prime Minister Trudeau will be ousted soon, with a new PM taking the helm in Q1. And both the Philippines and Argentina have midterm elections, which will be an important indicator of the current leadership's popular support. The Philippines is a critical ally of the US and sits on the front beach of hostilities with the Chinese Navy in the South China Seas. Of all the potential hotspots in the world, the Philippines is the most likely to have a military accident that leads to a broader kinetic conflict, especially since the U.S. reestablished bases in the Philippines and has an actual security agreement to protect them. U.S. troops would necessarily be put at risk if things blow up there. Now, the current Philippine President Marcos is a staunch U.S. ally, but the VP, who recently threatened to kill the president if an assassination attempt was made on her life, is a China sympathizer. How the midterm elections turn out could be an indicator of popular sentiment towards the US or towards China. Meanwhile, Argentina's Prime Minister Milei has drastically rearranged Argentina's government operations and policy towards capitalism and the US. Argentina has a troubled economic path with defaults and a sluggish economy, but Milei has made some progress. However, there's always pain and conflict that arises with drastic change. If Milei's mandate does well in midterm elections, it could greenlight a more stable and healthy economy for long-suffering Argentinians. Now, I want to dig in deeper on China, as it's the second largest economy in the world and the focus of US and EU economic, technology, and military competition. Truth is, there's been a stealth war going on under the sea, in space, in cyberspace, and diplomatic relations for at least a decade. Trump's position is more clearly defined, but how China reacts will determine the fate of global peace. Here's a great visual for us US-centric thinkers. If we see the world from China's perspective, you see why it's so concerned about Taiwan and the South China Seas. It's their buffer zone and vital waterway for global trade. Without global trade, China doesn't have a sustainable economy enough to import the natural resources needed for its own survival. To China's eyes, it's surrounded by potentially hostile countries that could strangle China's economy and access to energy, food, and raw materials. Unfortunately, despite its 1.4 billion population, its disastrous one-child policy has evolved into a coming demographic time bomb of too few young people and workers to sustain its economic growth. China needs to develop its domestic consumer economy for economic resilience, but with fewer young people having fewer and fewer children, the built-in economic growth that comes from spending on household growth goes missing. China is aging faster than it's growing wealthy. This could become a destabilizing problem as the Chinese communist leadership is unable to deliver the prosperity that it promised. At the core of their challenges is real estate. Now, this is an old chart, but China's economy is the most dependent on real estate in the world compared to its major competitors. About 5 years ago, China saw that the real estate markets were bubbly and implemented taxes and policies to deflate property prices and malinvestment. What was happening was Chinese citizens bought extra homes as investments, believing the government would never allow a real estate collapse. But as major developers went bankrupt, homeowners discovered that there was a massive oversupply of homes. They were either stuck with an unfinished house or unable to sell, even at a major loss. Then COVID happened and the economy took a downward turn that exacerbated and locked in the real estate collapse. Today, with most of their savings and wealth locked into an oversupplied and devalued real estate market, consumers won't spend and banks won't lend. Not good for economic vitality. So when you aren't getting a tailwind from demographics and household formation, you need to be more productive per unit of labor. Unfortunately, again, China's productivity hasn't kept pace with its economic power, especially during the Xi regime. There's still hope for China as it deploys more technology to boost productivity, but compared to its competitors around the world, China does not have a competitive advantage here. For comparison, the US is still pole position in the advanced economies, and with its lead in AI, we can forecast continued productivity growth. I mentioned that I'm rather pessimistic on Europe. Not only do they have age demographics similar to China, but the cost of entitlements and the new and rising cost of defense spending will limit their ability to stimulate their economies. Meanwhile, Europe needs to import the majority of their energy, putting them at the mercy of energy prices as a major cost input. Can you imagine if you had a car factory having to pay 50 to 120% more for electricity, while your American counterparts enjoyed a minus 16% cost reduction? This puts Europe at a structural disadvantage to countries that produce their own energy. Unfortunately, there are no quick and easy solutions here, so expect the EU to struggle and muddle through the next decade before they can regain energy security and revitalize their industrial base. Here are my main what-if questions that would alter my baseline outlook, and I'd like to highlight my top 3. First, the Powell-Besant relationship is critical to whether US monetary and fiscal policies will be coordinated or in competition. Powell and Yellen worked well together and produced impressive economic stability and growth during the Biden administration, despite high inflation, high interest rates, and a big regional bank crisis. The stock markets performed well, creating massive wealth for the US. But Powell's last Fed meeting may be a harbinger of the Fed's reasserting its independence, resulting in less coordinated, less impactful government support for the economy, markets, and the US dollar. Now, Besant is a well-respected macro money manager and should be able to work with Powell, a former private equity investor. But if Trump interferes with Besant's management, I suspect that Powell will do what he thinks is right, even if it goes against Trump's wishes. Second, big business is actually excited about Elon Musk getting into government, with hopes of deregulation and the return of laissez-faire capitalism. The problem is, when you get two alpha males together, I don't think they just agree to share power. If Musk were to quit or be fired, I suspect that corporate America and the economy in general would react very negatively. Third, the US-China relationship is foundational to world peace. For the time being, the US and our allies have teamed up during the Biden administration and have effectively firewalled China and stunted their economic expansion. Trump is going to try his strong arm tactics again, but it probably looks to reach a grand agreement with China to prevent escalating hostilities. Can a quote-unquote Mar-a-Lago Accord be reached with China? Will it work? I think an agreement can be reached with China, but I highly doubt its effectiveness. Remember, Trump 1.0 made a trade agreement with China, but China totally didn't deliver what they promised. I suspect whatever agreement Trump would come up with will be transactional in nature, but in my opinion, we need an ideological accord for an effective and enduring way to live and compete on the same planet. And here we are, the money shot. Based on my forecast of rising liquidity, a strong dollar, and the US economy outperforming the rest of the world, I believe stocks will outperform bonds and real estate, and US stocks will outperform international stocks. More specifically, I don't think the AI investment theme is over yet, but I do think it broadens out from just NVIDIA. Custom silicon for AI chips, agentic AI services for businesses, and AI devices are my top picks to continue riding the AI momentum. Other sectors that I'm bullish. Financials, specifically the big banks, could do well with government deregulation and less government interference, which should encourage a strong M&A cycle. U.S. industrials should have a Trump tailwind with potentially lower taxes for made-in-America products. I'm not as bullish on oil, but I'm bullish on natural gas demand, and I think it's likely to remain very strong as the energy needs of AI data centers is orders of magnitude higher over the next 5 years. I'm pessimistic on U.S. healthcare because I see healthcare costs as a huge target for DOGE to cut costs. And I think discretionary consumer spending will eventually be rather mute as price inflation begins to show up in the second half of 2025. The defense sector will likely remain strong as we can all agree that the world is less stable today. Additionally, selling weapons is a fantastic export and moneymaker for the US. I am watching commodities and copper specifically. The fundamental supply and demand picture looks positive to me, but we may need to wait for a trigger event to get investors excited. Finally, Bitcoin and other crypto should continue to do well in an environment of rising liquidity and Trump's blessing for the alternative asset. For my black swan risks, I added Elon Musk as he is immensely impactful to social media, technology, and economic trends. If he has a falling out with Trump, I could see a serious loss of faith in Trump's government and economic goals. I do want to remind everyone, however, that it's not going to be easy, smooth sailing for markets in 2025. PE ratios are already high, and as you can see in this chart, a high percentage of small and mid-cap companies have negative earnings. One of the hottest topics on Wall Street right now is whether the Magnificent Seven stocks will be able to continue delivering strong returns after almost 10 years of outperformance. Or, to oversimplify, has the Magnificent Seven already run so hot that we should expect a mean reversion back down? I like this chart because it compares the magnitude and duration of past hot runs. I want to highlight, however, two pivotal events that I think most investors forget. The first was in 1971 when the US dropped the gold standard and went full fiat currency. The Nifty 50 run happened when the US was still on the gold standard, but once we went fiat, all hot runs went longer and higher. Now, after the 2008 financial crisis, we implemented QE and increased the Fed balance sheet from about 1 trillion to 8 trillion. The Mag 7 run has been much higher than the pre-QE era, but we truly don't have any precedent or reference to how far and how high this cycle can go. What I do know is that the global liquidity should continue to rise in 2025, and that outside of China, the only investable AI stocks are all in the US. I think there's more room for this to run. I've shown this chart before, but I wanted to present a reminder that global liquidity goes in cycles, and we're likely still in the rising liquidity part. Having said that, we should be wary of the cycle peak sometime in late 2025. What this means to me is that for the first half of 2025, we should buy into market corrections. But towards the end of 2025 and into 2026, we should consider taking profits and diversifying our investments. Finally, I just wanted to show you this chart that maps global liquidity against Bitcoin prices. Conceptually, tracking liquidity against all assets, like stocks, bonds, and real estate, is a useful exercise and truly calls attention to the possible causal relationship between liquidity and risk assets. This chart seems to indicate that Bitcoin prices tend to rise with rising liquidity. And since we are forecasting rising liquidity in 2025, we may be able to enjoy some solid returns on Bitcoin. Looking backwards, I also found it interesting that Bitcoin has been the best performing asset in 11 of the past 14 years. This was eye-opening for me, considering that we went from wacky virtual money for geeks and nerds through intense government scrutiny and regulation to today becoming a credible digital gold for wealthy families and institutions. So many still think Bitcoin will wither like the tulip craze. It's virtual, it doesn't generate income, it's too volatile to be a medium of exchange, it has no value. I'm not a Bitcoin evangelist, but I do want to say that I think it does have value. In this crazy world, trust is valuable. When we buy a house or a business or stock, we have to exchange money via trusted escrow third party, and we have to pay high fees to these trust brokers. But because of the blockchain and open ledger structure of Bitcoin, we actually have digital trust, which is valuable. We trust the blockchain technology. I can feel confident to exchange Bitcoin with anyone on the planet for a fraction of the cost and confirm the transaction in minutes instead of days. Now, if anyone were to crack the encryption of the blockchain, this digital trust would evaporate. But until we get quantum computers that can do this, I think Bitcoin is a legitimate alternative investment. Okay, that's a wrap. Thanks for watching, and I hope it at least caused you to do some thinking. Again, these are just my opinions, which may change tomorrow with new information. Be sure to do your own research and manage your own unique risks. I'd love to hear any thoughts or feedback, so feel free to share and contact me with any questions. Happy investing and good luck in 2025. Cheers!